Hello everyone. So welcome to one more video on the list of videos on financial accounting. And in this video, we will be doing journal entries. So already I recorded one other video on journal entries, and this is just for practice. Okay, so let's the more you practice, the more you'll be getting the idea. So let's look at the instructions here. Journalize the transactions. So a bunch of transactions are given, and we are asked to journalize them. And already we have done a similar problem before, and this is how the uh, journal entries will look like. And this was the transactions, and this is the diagram I was explaining, or I was referring to identify which one will be under debit and which one will be under credit. Okay, so DEA, LER, dealer. DEA means dividends, expenses and assets. LER means liabilities, equity and revenue. These are all normal debit accounts, whereas these are all normal credit accounts. So what is the meaning? Here increasing is represented as debit, whereas here increasing is represented as credit. So if it is a, in other words, if it is a liability and liability is increasing, then it will come as credit. If it is a revenue and if your revenue is increasing, then it will come as credit. So like that. Similarly, if it is an asset and asset is increasing, then it will come as debit, like that. So in other words, let's say you paid rent expense. So when you pay the rent, expenses are increasing. So that means expense will come in the debit, whereas the asset means the cash will decrease. So the cash will come on the credit side, because decreasing, see, increasing represents debit. That means decreasing represents credit, like that. Anyway, so let's, with that brief overview, let's do one more problem as just for practice, because already one problem we did. Okay, so let's do this. Selected transactions for Sophie's dog care are as follows during the month of March. Okay, so let's write here. So this is the name of the company, Sophie's Dog Care, and we are doing general journal. Let's call this J1 as the page number 1. Now, what are the columns in a general journal? Yes, so the columns are more or less fixed. That is date, account explanation, reference, debit and credit. So these are the columns that normally we have for a journal. So debit, credit. Now this reference we will discuss later, and date and accounts explanation. That's it. So let's quickly do one by one. So I'll be little fast because already I explained in detail in my previous video. So this is next video in the playlist. Anyway, so March 1st paid rent for 1200. Okay, so 1st March rent expense, debit by 1200, cash will credit by 1200. So because it is an expense is increasing means debit. So that's what I mentioned here. You see, when expenses are increasing, that means show them as a debit. Okay, so like, and in that case asset, other words, the cash will decrease. Okay, so that's why cash is going in the credit. Okay, so that is the first one. Next, performed services for $160 on account. See, when you performing services, you will be earning revenue, but revenue increasing will come under the credit, right? So if you see, revenue is a normal credit account, increasing represents credit. Okay, so therefore, since you are performing services, you are getting service revenue, and this will be under the credit. Okay, so of $160. Now to balance this credit, you need a debit. Okay, so but here you see cash is not paid, it is on account. Okay, so on account. So what will be debited? So because you have not yet received, you are about to receive, so it is accounts receivable. Okay, accounts receivable. So this will be debited by 160. See, accounts receivable is also an asset. Okay, so asset increasing means it is debited. So that is correct. So that's about the second one. I'm sorry, this, the date is March 3rd. Next one, the date is March 5th. Performed services for cash of 75. Okay, so again, this is easy. Performing services. So you are getting service revenue of 75 and cash, because you are receiving cash, so it is easy. Cash will debit by 75, service revenue will credit by 75. That is the third transaction. Purchased equipment for 600. The company paid cash of 90 and balance was on account. Okay, this is a compound statement with three entries are needed. See, company paid cash of 90. So definitely cash will be in the credit. Meanwhile, the equipment is an asset, and when you are purchasing an equipment, that means your asset is increasing. That means equipment will be debiting. Okay, so simply on 5th March, you have equipment to be debited by 600. Okay, so that is what this says. Equipment is debited by 600. Meanwhile, cash is only credited by 90. Okay, so cash on the credit side you put 90. Now what else? Here you will have accounts payable, because you have not yet paid the remaining amount, so it will come under accounts payable, and that will be I think 510, because 600 minus 90 is 510. Okay, so now 600 it is balancing. Total debits and credits should balance all the time. Okay, so this is about this entry. This is on 8th. In fact, this is on 5th. Okay, so okay, be careful with the dates. Now on 12th, received cash from customers billed on March 3rd. Okay, so on 12th you received the cash, so cash will be debited. How much cash? See, on 3rd there was accounts receivable of 160, so 160 has been received, and therefore you have to credit the accounts receivable by same amount 160. So this will, here the accounts receivable has increased and here accounts receivable has decreased, so both will get balanced. Okay, so that is about this entry. So let's do the next one. Paid salaries and wages to employees $525. Okay, so this is again very simple. This is a salaries and wages expense. Salaries and wages expense. Okay, so that is 525. So why expense is under debit? Because this expense is increasing, and you see here again expenses is under normal debit. That means increase represents the debit. So therefore expenses are increasing by 525 and your cash is decreasing by 525. So the cash will be under credit. So therefore this transaction is complete. Paid utility of 72. Again very simple. This is 22nd. So utility expense of $72 and then cash of 72. So that is about this one. Now borrowed 1500 from Grafton State Bank by signing a note. So okay, from a bank you are getting a note. Okay, so this is notes payable. See, when you are borrowing money from bank, your cash will increase. Okay, so 24th, so cash will increase. So cash debited by 1500 and notes payable will be credited by 1500. Notes payable is a liability. Liability increasing means credit. Okay, so that also matches. So I have 3 more transactions. So I'll try to fit in those 3 transactions in this remaining place. So 27th. So paid 220 to repair service for plumbing repairs. Okay, these are very easy. So just repair expense. Cash 220 debit under expense and 220 credit under cash. Okay, so that is this one. 28th, paid balance amount owed from equipment purchase on March 8th. Okay, so when you are paying balance amount, so if you look at this equipment purchase, so there is a account payable 510 is there. So this account payable has been paid, so it will come under debit. So here I'll go for 28. Accounts payable 510, and then since you paid the balance amount, your cash will reduce. So cash will be credited by 510. That is this one. Last one, paid 1800 for 6 months of insurance. Okay, so you are paying insurance amount. Okay, so now the thing is, you are paying for 6 months, but this is for the month of March. That means in future you are paying for the next 6 months. So when you pay like that, this is not an expense. This is basically a prepaid insurance. This is an asset. Okay, and that is how you need to record it. So that is 30. So since you paid, cash will be credited by 1800. So cash will credit by 1800, but now what will be debited? Okay, so this is important. It is not an insurance expense. It is a prepaid insurance. So prepaid insurance is an asset which will increase by $1,800. Okay, so this is the complete journal entry of all of this. So this could be a kind of short video. So and again, if you want to check, if you add all the credits and add all the debits, it will exactly match. But then that number, usually people don't add it. Just for checking your errors you can do that, but otherwise these are the entries. Okay, so I hope you are learning something from this playlist. This is not a single video, this is a multiple videos, one among the playlist. And if you are interested in this financial accounting subject, please go through that playlist, and starting to ending you look at each video one by one, and you will be learning the accounting cycle. So thank you. So if you like this video, please press like button, and you can share and subscribe. See you in the next video.